Hey there traders, welcome back for another free video from thestockbandit.com. I'm sure glad that you've made it. So let's take a look at the major indices here as we head into a brand new week of trading. It's going to be important to not only take note of the recent price action to kind of get a little bit of a feel for where we are and where we may be headed, but also to eyeball some important levels to keep in front of us as we head into the next few days of trading. So last week we did see a strong start but a very weak finish as we popped on Monday and ended early Tuesday, but finished pretty poorly on Tuesday and then sold off Wednesday, Thursday, and Friday to go out at the lows of the week. Now we also capped off September as the 5th consecutive monthly decline for the S&P 500. So the market has been very weak, although for the past couple of months, or few months I should say, we have sold off to end July and begin August, and then we've really seen lots of back and forth since then. We've seen a number of changes of direction. We've seen tons of gaps on a day-to-day basis, so we may close at one level one day and open drastically different the next, whether to the upside or the downside, and those gaps continue to get filled. So in more recent weeks though, we have seen recovery highs get established and then a pullback and then a rally to lower levels, and that is creating some lower highs here on the on the daily charts here, which is something that we simply can't ignore. So we may still be moving somewhat laterally here, but in the short term we need to pay close attention to the fact that we're establishing short-term lower highs. Now for the NASDAQ on Friday, we closed at 2415, and that was just below the prior week's low down here at 2420. So short term we're making a lower low here as well, and it looks like we're headed back toward potential support down here at this 2331 level. That's where this lower red line is. We found some support there in early August and mid-August in that same area, but it may be that we're headed back for a test of that zone. So definitely continue to maintain a open mind here and definitely respect this market for where it is and what it has done and where it may be headed. For the S&P 500, it looks like we're headed back down here for a test of this 1120 area where we have seen that zone held a few times. We're only 11 points from there as of Friday's close, which by the way was a decline on some expanding volume, not what you want to see if you're a bull. And then we've got key support down here at this 1101 where we saw an intraday low here on August 9th. So S&P, by the way, established this recovery high right here, and then a couple of weeks ago established a lower high, and then last week saw a second lower high. So it looks like these rallies are resulting in sellers emerging at lower levels, and that's not a good thing here for this market. So we may see a resolution here to the downside if this continues, so definitely stay on your toes out there. For the Russell, this index is just hovering right down near the low end of this low level channel, so we saw this big decline, and then we've been in a number of weeks of digestion here, moving laterally since then, but we may be looking to head out of this range in short order here. Now we have the lowest close down here at 643, and we went out on Friday at 644. That's about as close as you can get for a test. The intraday low is down here at 634. So if we move down through that level, expect to see more selling kick in. For the Dow, this index not acting very well either. It's also established a recovery high here, a short-term lower high, and a second lower high looks to be in place at this point. We went out just over 10.9 on Friday, and we've got 10.6 down here as major support for this index. So we may be looking at a test of the low end of this range, possibly a break in the days ahead. So we've got to stay very careful out there. Don't be trying to make the hero trade step out in front of this market, because it definitely has the potential to rip your face off. And then the VIX, which is our fear index, we've got the volatility index here. We've got a couple of big highs up here at the 48 area, And then more recently, we've topped out in this 43 to 45 range a number of different times, including on Friday. We closed out just a fraction of a point from 43. So if we can move through this 45, I would expect to see a quick push to this 48, and then most likely another push through that area. If fear gets on the rise, you can expect that to accompany market weakness. So stay very careful out there. If you're looking for some trade ideas, be sure and check out the free trial at thestockbandit.com. We'd love to show you what we're all about. But other than that, thanks for joining me for this free video. Have a great week of trading, and I will see you soon with more.